G'day everyone, welcome back to Pete's Investing. Today's April 4th, 2023. This is the US dollar basket update. Okay, zooming out from all three timelines, the daily, the 4 hourly and the hourly. You can see there the CCI 1500 with a moving average 400 on all time frames is bearish. So only short positions at the moment. Avoid going long in any timeline. So let's zoom in on each of these. So first off, just between, I'll zoom out, you can see there, I've got this key support area at 10.051 and the resistance area up here at 11.470. What is it? 11.471. Now it came up and bounced off the 38% retracement from that range and it turned further to the downside. So that was already in a bearish momentum, and that confirmed the bearish momentum after it bounced down from that 38% level. On the 4 hour time frame, zooming in a bit closer, again we've got this these diagonal trend lines, and it's forming in this wedge, and it's now respecting those two trend lines. And in that low to that high, this Fibonacci retracement, you can see there, it's once it penetrated the 61%, which is our key area of reversal. On the 4 hour time frame, it was going long during that period, according to the CCI moving average. But once it penetrated that 61%, that was our first sign. Well, that was the first sign before when it dropped below the moving average on the CCI. But then it confirmed by dropping below on the 61% retracement to the downside and sort of bounced off this ascending diagonal trend line during that period over those days. And zooming in closer on the hourly chart, again zooming in a lot closer, we can see this little time range there. It actually punched through the 61% with a bit of a false break, but notice on the CCI 1500 it has a bit of a false break there as well, but the moving average itself is in a continuous decline. So again, you would not have taken long trades. In fact, again, if you follow my channels, you don't take trades in isolation on one time frame. If you're going to take long trades on the hourly, you want to make sure the trades the trend is going long on the 4 hourly at least. Preferably you want to take the trade in a direction of all three timelines. So in this case, we're going short on a daily, short on the 4 hourly, and short on the hourly. So again, taking predominantly short trades on the US dollar at the moment. Now at the moment, it is bouncing off this ascending trend line. So you could potentially maybe wait for it to bounce to the upside and then reverse. Once it reverses to the downside again, take further short trades. One trading idea I do have for you, I'll show you if you've followed my videos, you'll know I've got these fractals. I'll zoom out. So again, any one of these periods, you'll see here I've got these little spikes to the downside. Ignore the spikes to the up, they're going long. We don't want to take any long trades. So these spikes here represent, I'll show you this one here because it's a bit clearer, when the bar or the candle breaks below the fractal. So these two red lines are the fractals. So when it breaks below the fractal, that's when you go short, and you take your profits at the 1% level. Again, you avoid going long, and you would have gone short during that period there, and going up, take your profits at about 1% gain when it goes short. So again, and that applies to all those points there as well. Go short, take your profit. Back here, when it broke down below there, go short and take your profit when it breaks down again. So again, predominantly short positions, but be careful. We've got this key diagonal ascending trend line and also this key support line, this horizontal line, to be wary of. To understand how to properly trade using the average down approach, reference the links in the description below. Subscribe and support us more on Patreon, and we'll see you in a future video.